My name is Ben Nathan. Are you struggling to make a consistent profit month by month? If you are, I'm sure you've already been inundated with advice surrounding things such as consistency, trading psychology, finding the right method, but one thing very few traders touch on is fundamentals. This short video will teach you the sheer power of applying fundamentals to any technical trading strategy that you have. If you apply these basic principles, you will find you will have a much greater return on investment no matter what your trading method is. To highlight this, we're going to look at just a small bundle of news releases that came out at 10 o'clock today. It was Eurozone news, and we had the consumer price index and also the unemployment rate. Now, the CPI, we did see a slight fall. Now, this was to be expected to an extent because we know CPI relates somewhat to inflation, and therefore we know inflation has been falling for the euro overall. However, the unemployment rate did rise. Now, we also know that one of the effects of QE, which is something that was unveiled as a way to improve the Eurozone economy, one of the knock-on effects of that, or the hoped effect, is that employment rates rise and therefore so does the economy. The unemployment rate did fall and was better than expected. So, of course, the market reacted quite positively to this. So, for trading the Euro news, what would your instant reaction be when wondering what pair to trade this on? Now, I'm willing to bet 90% of you would say the euro dollar. It seems like the obvious choice. But why not think outside the box? Of course, the euro is one currency that's going to be affected, but what's going on across the other currencies? Now, I know from research over the last week or so, just a few minutes a day, and by being in touch with the fundamentals, I know that fundamentally the Australian dollar is quite weak. And I know the reason for this is because we expect a rate cut next month, which is basically a bit of a fallout from the reducing value of commodities over the last couple of weeks. So we've got two pieces here. A euro that has some positive news, but also a weak currency, which is Australian dollar. So if we put that together, we've got the euro Australian dollar pair. Now, let's show the sheer power of applying this fundamental reasoning to your trading. So if we have a look, let's just go back and have a little look at just before the release on both of those pairs. So the euro, immediately after the release, we saw a jump up by 21 pips before it started to retrace. So great, there's a 20 pip opportunity. It's not to be scowled at, it's a good opportunity. But what about if we applied those fundamental principles and thought outside the box and chose a pair with that stronger fundamental backing? Now remember, it's the exact same release at the exact same time, but just on a different pair. Okay, so we'll look at this on the Euro Aussie. And if we look at what's happened since then, we rallied up by 60 pips and continue to rally up now. So we're now looking at a 70 pip rally. So the exact same release has caused this effect on both of these charts, only the effect on the euro, maximum 20 to 30 pips, the effect on the Euro Aussie, maximum 60 to 70 pips. So we're looking at almost 3 times the amount of movement based on the exact same release. And that is purely based on applying sound, knowledgeable, fundamental principle to your trading. As I said, if you apply this to any trading method, you will see a much better result to your trading. And that's something that I'm happy to help with.